Good morning, good people. How you doing? Welcome back to Stock Up with Larry Jones. Well, it's CPI, Consumer Price Index. A lot of people are expecting it to be high. We're expecting CPI to be high. Now, just because we expect it to be high doesn't mean it's going to be high. And I know there's a lot of talk about them fudging the numbers, and we all know. You guys all know that these numbers that they've been posting, these CPI numbers, were not accurate, right? That's no surprise. But we trade the market that we're in, and we don't. If you are new to the page, go ahead and hit the like, subscribe, and notification bell. This video will be time-stamped, so you'll be able to go right to the CPI report, okay? All right. Hey, good morning, good people. But let's talk about a few things. Let me check something right quick. Make sure we're still on. Yes, we are. So the pre-markets are up right now. As we could see, the Dow's running up. This is normal. 191 points before CPI, of course. We are an hour before opening bell. As you can see, the S&P futures are up 26 points, and NASDAQ is up 122 points this morning. If you're new to the page, make sure you download the first link below, Stock Up You, and learn how to trade. Learn your basics, your fundamentals about the overall stock market, then learn your basics on charting and your basics on options. You have all of these ladies and gentlemen lending their talents to the class. And then lastly, we have 15 free stock with the Moo app. That'll be the second link below. Please go ahead and download that and then deposit $100 minimum, and you're going to get 5 free stock. You can get up to 15 free stock with $1,000 deposit. Okay. Let me check it one more time. Yep, we're still going good. Just wanted to get a few things in the way as we get ready for this CPI report. Now, what we're going to do is we're going to keep an eye on the Dow, as you can see, 179 points, the S&P, and the NASDAQ. We're going to keep an eye on those futures. Okay, what we got? We have 2 minutes, right? So I want you guys to keep an eye on, let's see here, Coach Owner Tapestry is the name of the company. They're supposed to buy Versace, the owner of Capri Holdings, okay? Let's see here. I took a snapshot of that, but because we are getting ready for the CPI, it is Capri Holdings. It is up 57% this morning. Capri Holdings, 57%. So if you're going to buy a Coach purse, own the company that owns Coach. Capri Holdings, all right? We just want to put you guys on that, right? So, yes. Hey, good morning from the UK. UK, I got some good news for you. Webull is available in the UK. I will have a special link for you guys. You guys will be able to do options, all of that, trading, all of that now, okay? You can't use Moo, but you can use Webull, and we will be going over that. Let's just go right into it, good people, just in case. We don't want to miss anything, okay? So I'm just going to keep it on here until they report.
Welcome back to Squawk Box on CNBC. 30 seconds away from the July CPI report and the jobless claims number. Let's just get a look at the markets. Dow's up 184 into the print. The whisper is dovish. I'll quote Andy Brenner at Nat Alliance. Whispers for the core, maybe 3.1 on the headline.
If it stutters, if it's flutters, I can't help that. But the audio will continue to. You will be able to continue to hear the audio. Okay, so let's just listen.
In 2 seconds, that's all out the window. Rick Santelli, how does it look?
Well, let's start out with CPI, shall we? Our July read up 0.2%, exactly as expected. And if we look at core, also up 0.2 as expected. And what's noteworthy about this, it's the second month in a row, and I don't see a revision yet, where core is up 0.2, which means it's the third up 0.2 since the highs going back to 1981, were established up 0.8. That was in April of 21. We haven't been at the lower level since February of 2021. Now, let's look at CPI year-over-year numbers. 3.2% on headline, 3.2. That's 0.2 higher. 3% in the rearview mirror, and that 3% in the rearview mirror was the lowest since March of 21. So that's moving in the wrong direction. And if we look at year-over-year core, arguably the most important data point here, 4.7, exactly as expected, and 1/10 less than the rearview mirror, which was 4.8, which was the lowest since OC of 2021, and, well, at 4.2, OC of 21, and we're still hovering there because 4.5 is the number. Now, even though 3.2 is higher, Kelly, than the 3.0 in the rearview mirror, there is an asterisk here. The fact that we are expecting a number actually even higher than that at 3.3. Because if you look at interest rates, we haven't moved that much. We were basically at 397 and 10s. Right before the number, you get that pre-number panic. We moved down to about 395. We're trading at 396. If you look at a two-year note, arguably maybe a better gauge right now. It's at 473. It was at 476 prior to the number. That was down 5 basis points. So, of course, now at 72, he had another 3. We're down 8 basis points. If you look at pre-opening equity futures, the Dow futures have improved here. They're trading well over 225, on their way to 250. So the data points, even though we had that one glitch on year-over-year headline, it certainly seems to be falling in place. And there are a lot of moving parts here as everybody tries to monitor how all this affects interest rates, the yield curve. Long-dated Treasury's been a little bit more stubborn on their yields, although they've come down. And to those, I just say the following. We have lots of deficits here. Interest rates are very important. The Treasury, of course, is going to have to wake up. Last I looked, 1.62 trillion deficit.
So there we have it, good people. July. Let me see here. 1 minute.
Well, exactly what they may be paying closest attention to. Kelly, back to you.
Rick, thank you.
Oh, I'm sorry.
Yeah,
Wait,
please.
I'm sorry.
Because it sounds like claims, not quite as positive.
Oh, my gosh. 248,000 and continuing claims, 1,684,000. My apologies, viewers and listeners. Got so caught up in CPI. 248,000 actually is the highest level, believe it or not, going back to the last week in June when it was 249,000. And continuing claims, much too well behaved, and maybe that's some of the stigma why interest rates have been a little more stubborn on the long end. 1,684,000 goes back to the 1,679,000 that we had in the second week in July. We have not been over 1.8 million now since the last week in April, which really speaks volumes about how the labor market statistics are confounding many, including me on many levels. Now, back to you.
Thank you very much, Rick. Let's get to our econ panel for some instant reaction. The market, by the way, hanging on to about a 0.5% gain here at the open and a 1% gain for the NASDAQ. Michael Strain is here. He's American Enterprise Institute's Economic Studies Director. Angela Hanks is Demo's Chief of Programs and a former Biden administration Labor Department official. Steve Leisman is here on set with us. Rick is still with us, and Mike Santoli joins us from the New York Stock Exchange. Welcome to everybody. Steve, I'll just start with you for what jumps out as the most impactful.
What jumps out is the Fed watchers just took off the month of September.
Completely.
Well, not completely, but there had been a 13, 15, 20% probability of a rate hike in September. That has now plummeted to 7.5%. The November hike had been up 30, 35, as high as 26%. So they're still on guard for for November, but they're basically bringing down that probability.
All right, let's talk about it. All right, July CPI report. We have 0.2 versus 0.2 month over month, right? Let me get my settings here back up. There we go. All right, so we got the report, July CPI Consumer Price Index. It measures the change of rate for goods and services consumed, right? Consumer Price Index, CPI, was 0.2 versus 0.2 estimate. So it fell right in line. That's why I didn't come with all of the crazy fear mongering and all of that, because we just don't know. It's just better to wait. Okay. And that was month over month. Now it came in slightly lower year over year, 3.2 versus 3.3. So inflation was the month over month was expected to be higher at 3.3. It came in 3.2 year over year. That was better, right? And then CPI X food and energy, this is month over month, is 0.2 versus 0.2. Came right in line. CPI, X food and energy year over year is 4.7 versus 4.8. So it came in a little low according to the numbers that they gave us. Okay. So CPI month over month fell right in line, 0.2 versus 0.2 month over month. Year over year, it came in slightly lower, 3.2 versus 3.3, right? And as you guys could see, the market jumped up, the Dow jumped up while the report was coming out. Now, as we could see here, it ran up a full percent. And now, as you can see in the pre-markets, it's 194 points, the Dow. S&P is up 25 points. NASDAQ is up 113 points. So we know how this goes. It'll be a green day. It's going to be a green open for sure. But you know how this goes. It always takes time for you and I the markets to decipher what these numbers really mean. So be careful in your plays. I just wanted to bring this to you guys live, which is you wouldn't believe what I had to do to stream that live. Okay. So hopefully I don't get in trouble for doing that. All right. But hey, it's worth taking the risk for you guys. Okay. I'm going to leave it right there. Let's see here. I don't trust these numbers. Yeah, I hear you. Yep. I hear you. I'm not talking about the Shiba dog. Thanks for the super chat, but all of that stuff doesn't mean anything. I'm just telling you guys, you don't get caught in the Shiba stories and the Shiba dog and the Shibarium and all of that stuff. That stuff is made. These are just talking points. It's simple. If you're in the SHIB, look at where SHIB was in the last 60 days. Look at its lowest point and start to buy there. It's just that simple. Look at its lowest point in the last 60 days and start to buy there. And if you don't want to go back that far, if you don't think it's going to go back that far, just pull up a chart, go to Shiba Inu, go to the last 30 days and start to buy there. But be patient and wait until it comes back down. It will. Hey, the numbers is off, but hey, I'm just telling you. Yeah, I'm with you there. Okay, let's go shopping. All right. Hey, you guys thank you guys. You guys, I appreciate it. Anytime. Thanks you. Hey, so let's do me a favor, good people. Hit the like button. And if you're new to the page, this is what we do. We just give you guys information. Sometimes I give you plays. A lot of times I'll share my plays. I share my wins. I share my losses. I help people make money. That's what I've been doing here for 3 years consistently, Haven't taken a vacation, though I will be taking one soon. Okay. So, hey, in closing, make sure that you check out the Moo link below. Get up to 15 free stock. Okay. With $1,000 deposit, but just with $100 deposit, you get 5 free stock. And then the top link below will be Stock Up You. Just learn, especially for those of you that are beginners, learn and earn, okay? Make sure you invest in yourself first. We will see you again later today. Make sure and continue to share my page with other people, friends, family. Listen, I'm just asking that everyone that's listening to me share my page with at least 3 other people, because one of them will subscribe. All right. I'll talk to you guys later. Live, love, laugh, learn, and earn.